We all know about income tax, but have you heard of capital gains tax? It's a tax on the profit you make when you sell something that has increased in value. This could be an asset like property, excluding your primary residence, stocks, bonds, or even art. You don't pay capital gains tax on everything you sell, just on things that have gone up in value since you bought them. For example, you buy a vintage comic book for £50 and sell it for £500. The £450 profit is a capital gain. HMRC wants a piece of that profit pie. The good news is everyone has a capital gains tax allowance. For the 2023-24 tax year, the allowance is £12,300. If your total capital gains in a year are less than this amount, you won't pay any capital gains tax. Let's say you sell shares and make a profit of £20,000. After deducting your £12,300 allowance, you're left with £7,700 of taxable gains. The rate of capital gains tax depends on your income tax bracket. Basic rate taxpayers pay 10% on gains from assets and 18% on gains from property. Higher rate taxpayers pay 20% on gains from assets and 28% on gains from property. For example, a basic rate taxpayer would pay 10% on £7,700, which is £770. Higher rate taxpayers would pay 20%, which is £1,540. HMRC provides online tools to help you calculate your capital gains tax. Keeping accurate records of all transactions is crucial to avoid disputes with HMRC. Understanding capital gains. Tax is not just about avoiding a hefty tax bill, it's about making informed investment decisions. Knowing how capital gains tax works can influence your investment strategy. For example, you might hold on to an investment longer to take advantage of your annual allowance or invest in tax-efficient wrappers, like ISAs, where your gains are tax-free. If you're considering selling a valuable asset, knowing the potential tax implications can help you budget effectively. Staying informed about updates or changes in legislation is crucial to ensure you're always on the right side of HMRC. Various resources, including the HMRC website and financial advisors, can help you stay up to date. There are ways to legally manage and reduce your capital gains tax liability. One strategy is to make use of your annual allowance. Spread the sales of multiple assets over different tax years to maximize your allowance. Offset your capital gains against any capital losses. For example, a £10,000 loss on one investment can offset a £20,000 profit on another, leaving you with a taxable gain of £10,000. Investing in tax-efficient wrappers like ISAs can be a game changer. Gains made within an ISA are completely tax-free. This can help grow your wealth over the long term without worrying about a hefty tax bill. If you're unsure about anything related to capital gains tax, seek professional advice from a qualified accountant or tax advisor. They can provide personalized guidance based on your specific circumstances. It's always better to be safe than sorry when it comes to tax matters.